Assalamualaikum and good day everyone. Today, my group and I would like to present about MFRS 8 operating segment and MFRS 134 interim reporting with a focus on how it applies in real company. MFRS 8 is a financial reporting standard that explains how companies must report information about different operating segments within the organization. In simple words, a business may have more than one type of activity. For example, Genting has hospitality, resort, plantation, and investment activities. MFRS 8 requires the company to separate and report its activity so users can clearly see which segment is performing well and which is not. Each operating segment must earn revenue and incur expenses, have its performance reviewed by the management, or we call especially the chief operating decision maker, or we call it as CODM. This allows investors and stakeholders to understand the real performance of each part of the business. The reason segment disclosure is required is to provide transparent and meaningful financial information to help users assess risks and returns of each segment to ensure that reporting reflects how the company is actually managed internally. In other words, MFRS 8 helps ensure that what is shown in the financial statement is aligned with how the business is run in the real life. Not every business activity must be reported, only those that have significance. A segment must be separately disclosed if it meets any of the following: 10% of the total revenue, or 10% of the total profit or loss, or 10% of total asset. In addition, if total revenue from reported segment is still less than 75% of total company revenue, the company must add more segment until it reaches that 75% level. This ensures users to get enough information about the company's major business activity. The CODM is the person or group who is responsible for allocating company resources, reviewing segment performance, making strategic decisions based on segment result. This could be the CEO, the COO, Senior Management Committee, or the Board of Directors. Their role is very important because segment reporting must reflect how the CODM views the business internally. In the case of Genting Malaysia Berhad, individuals such as General Tan Sri Muhammad Zahidi, Chairman and non-independent non-executive director is involved in strategic oversight and decision-making. For example, of other company is Datuk Chua Tia, the non-independent non-executive chairman, who is one of the CDM from 99 Speedmart Retail Holding Berhad. They review each business segment's performance, such as resort and hospitality, leisure and entertainment, plantation operation. Their decisions affect how resources are allocated and how the businesses continue to grow.
Now, let's look at type of segmental report under this company. Based on the company financial report, firstly, they have business segment. They are currently operate two business, which is leisure and hospitality, as well as properties and investment. Under leisure and hospitality, it has divided for two categories, which is gaming operation and non-gaming operation. For non-gaming operation, there is hotel room, food and beverages, attraction and entertainment revenue, tenancy, transportation, and others. As for properties, the revenue is from lease income, meanwhile investment is from dividend income and other services. The second type is geographical segment. Currently, Genting Malaysia Berhad has been operated in Malaysia, United Kingdom and Egypt, as well as United States of America and Bahamas. So, based on those type of segmental report, we can identify the benefits of this segmental report. Firstly, it can enhance company decision-making and improve transparency. This is because it can help company decide where they need to invest or which type of business operation they should expand. This helps management to make better business plans, allocate resources efficiently, and focus on profitable segments. For example, Since Malaysia and gaming operation earns the most, they might want to strengthen the market. Besides that, by showing details from each country and business activity, it allows investors to understand the company's strengths and weaknesses. This makes the financial statement be more reliable and trustworthy because it gives a true and fair view. Second, segmental report help company assess diversification and risk exposure. From the report, we can see that the company is exposed to certain risks because most of its revenue and asset come from Malaysia and gaming operation. This means if anything happen in Malaysia like economic slowdown or political issue, the company's income could drop a lot. In addition, since gaming brings in most of the money, the company is also exposed to regulatory risk if law about gaming change and market risk if fewer customers visit or spend less. However, the report also shows the company earns money from different country and different type of business too. This helps to reduce risk because if one country performance drop, income from other countries can still support the company. If gaming income goes down, revenue from hotel, food, property or investment can help balance it out.
FAR570 prescribes the requirements for preparing and presenting interim financial reports, which include quarterly and half-yearly reports. The main objective of this standard is to ensure that a company provides timely and reliable information about its financial performance and position between its annual reporting dates. In simple terms, it helps investors and stakeholders stay updated on the company's progress throughout the year, not just at year-end. During the quarter ended 30th June 2025, Genting Malaysia Berhad completed 2 acquisitions that affected both its financial position and performance. First, Genting Casino UK Limited acquired Genting Casino Stratford Limited and Genting Management Service Limited for about RM159.6 million. This reduced the company's cash balance but increased its total assets as the Stratford companies were added to the group's balance sheet. The acquisitions also expanded Genting's presence in the UK, where the casino operations are now contributing additional revenue and profit to the group. Next, Genting ER Limited acquired the remaining 51% interest in Genting Empire Resort LCC for about RM174.3 million. This purchase gave Genting full ownership and control over its US operations. Financially, it reduced cash but added the subsidiaries' assets and liabilities to the group's account. Since Genting now owns 100%, all of revenue and profit are consolidated, likely improving overall performance. In summary, both acquisitions strengthen Genting's international operations and are expected to enhance future profitability.
Okay, next, for the current and comparative interim financial statement, Genting Malaysia Berhad prepares its interim report for the period from 1st January 2025 to 30th June 2025, which represent a half-yearly reporting period. According to MFRS 134 interim financial reporting, the company present both current and comparative figures for each financial statement. Okay, so firstly, for the statement of profit or loss, the current interim period covers from 1st January 2025 to 30th June 2025, while the comparative period covers 1st January to 30th June 2024. Similar for the statement of comprehensive income, the current period is from 1st January to 30th June 2025 and the comparative period is from 1st January to 30th June 2024. Next, the statement of financial position is presented as at 30th June 2025 for the current interim report and as at 31st December 2024 for the comparative interim report. For the statement of cash flow, the reporting period for the current interim report is from 1st January to 30th June 2025, while the comparative period covers 1st January to 30th June 2024. Same applies to statement of changes in equity, where the current period is 1st January to 30th June 2025 and the comparative period is 1st January to 30th June 2024. In summary, all the statements except for the statement of financial position cover the period from 1st January to 30th June for both the current and comparative interim report. The statement of financial position, however, is reported as at 30th June 2025 for the current interim period and as at 31st December 2024 for the comparative period.